Hey everyone, welcome back. So the video that I'm doing today was supposed to come out the day after the earnings. This is a SoFi stock earnings call video. Now, earnings call are really interesting for me personally because what you can find out about the earnings call or from the earnings call about the company, you can sometimes miss reading the numbers and reading the financials. So earnings call video is personally very exciting and interesting, and I really love the Q&A section because Q&A section gives you a lot more perspective on the company and the future. Okay, a quick update about my last video. So thank you for each one of you for coming on Twitter, following me, and then retweeting the tweet. We have done what we could right now. I have emailed SoFi's investor relation and I'm waiting for a response from them. And of course, I'm sure that they also got the attention of all the retweets and all the messages that we have sent. Now, I want to make something very clear. So SoFi is a very bullish company for me personally. I'm very bullish about the future of the company. I'm very bullish about the prospect of the company and what they're doing. Truly believe in the management, truly believe in the company. So I want to get that out first because there were some questions about, I'm not being bullish because I think company is not going to do well in the future. No, but when a management of a company take a step like reverse stock split, whatever could be the reason that the $5 mark institutional investor, I have seen that a lot, the short sellers, all those things are all fine. But we need to know the real reason why management is doing it. Is it because of the short sellers? Because if the company is doing it because of the short sellers, I think it's a wrong approach because they need to focus on improving the product and services and getting a better TAM, or basically reaching out to more areas or more markets so they can grow their revenue. Shorts will fly away anyway. Elon Musk didn't focus on the shorts. He focused on growing the business, growing the volume, growing the gigafactories, and shorts eventually just, they're scared as hell from Tesla right now. And then we talk about, okay, institutional investors, the $5 range. That's fine, understandable. But we need to know exactly the reason why SoFi is basically taking this step of reverse stock split. And that's all I needed to know. Doesn't matter if Anthony Noto comes on the channel or not. If he can, or the management or the SoFi can release a statement, that'll be enough for us investors to keep invested in the company. I'm long SoFi. I have a lot of shares and I just bought, when the earnings came out, I bought that day as well, more shares. And I will continue to DCA as we get into more and more market pressure. And I'm going to talk about it in a separate video, what I see coming in the next few weeks and few months. But today we are talking about SoFi's earnings call. And the earnings call had some questions which had me, I'm smiling right now because I know that they were amazing. And there were few analysts that I want to point out, especially the Bank of America analysts. So it's going to get interesting, so make sure you watch it. Okay, so now I'm going to share my screen and I have highlighted some questions and answers, and we are going to go over and see how SoFi responded and what it means for us investors. I'm going to go off the screen, so your focus should only be on questions and answers. Okay, so it says over here, and I'm actually that part of the Q&A where they're just talking about questions and answer. I'm not going to go over all the numbers because we have already gone over all the numbers in our previous video. So first question was from Dan Tolov, and he basically asked that I had sort of like maybe a long-term question, and that is I was actually surprised to see the stock trade down today so much, as I think a lot of it had to do because he reported, because I'm sure, just to kind of let you know, that Bloomberg has many mistakes in the transcript, and they even mention it at the end. So please ignore these error about he reported, or he's basically saying they reported or SoFi reported after upstart. And I think there's a lot of confusion out there in the market from the calls that we are getting from investors about the nuances and the differences between the quality of SoFi and some of your competitors. Can you continue talk to what people are misunderstanding here and what they are missing when they're sort of putting you in that group? Now, of course, there are a lot of grammatical errors, so take it for what it's worth right now on the screen, but this is what SoFi has to say. The biggest difference is we are building a one-stop shop. We have heard that from Anthony Noto many times, that they are basically focused on building a one-stop shop. Then they are saying that we are trying to build a lifetime relationship with them to be there every step of major financial decision, their lives, and all the days in between. This was the main reason. I'm going to come briefly in the camera. So this was the main reason why I started investing in SoFi. If you are new to the channel, you may not have seen one of my previous videos, one of my early videos on SoFi, and I'm talking about I went as far back as September or October or maybe before that of 2021 when I picked up SoFi and I looked at it and I was like, this is an interesting company because the way they have broken down their product is very interesting. If you go to their website and if you look at their product, pay attention to one thing. When you're going through the list of the product, you will see product are listed as the consumer ages. So they have a student loan, then they have a graduate loan, then they have a marriage loan, then they have a mortgage, then they have a personal loan, then they have a retirement IRA, 401k, stock, everything in between. That's what made me realize that they are doing things very differently. That means they are thinking outside the box. And that's what kind of made me invest in the company in the first place, because they are not letting the hand of their the consumer, not investor, but their consumer be, by themselves for a single minute. If you need this, we have this. If you need this, we have this. So that was a very interesting part or very interesting thing that I saw with SoFi, which kind of made me realize that this company is different than other fintech. Okay, coming back to this right now. So this is what they're saying, that we are in between every day for their consumers. Okay, within technology platform, there are two primary businesses there. But there is more to be added, and Technisys and Galileo, and they are incredibly complementary. So they both, Technisys and Galileo, they complement each other. We know that Technisys and Galileo are basically an intersection for SoFi to kind of go into that AWS of fintech. It's a very high margin business. Technology companies are valued higher. Technology companies makes more money. We know that, we have seen it time and again. And I think SoFi is kind of planning themselves to be, or stepping in the shoes of AWS, where they can absolutely do this in the coming years and in the coming months, I would say. Because again, Technisys and Galileo are not from ground up. They already acquired the company that had clients, that has businesses, that had technology, that had IP already existing. So I think this is going to be very critical for SoFi's growth going forward. We are very diversified, and one of the best reasons why we have been able to navigate the challenges of the last 4 years, pay attention, they're not talking about just pandemic, but even before that, and there have been multiple challenges every year when there's economic or industry related or credit related, because we have the diversification and can really, or I don't know what they're saying, reality in our resources, I think they're trying to say something else, towards the best growth opportunities. And that's why we continue to deliver record revenue despite the negative impact on the student loan moratorium. So again, they're talking about the student loan here. They're saying diversification, it's what's keeping us ahead in the competition and away from their competitors, which is again a very bullish point. Now let's move on to this. This is again a very important point that we all know, but I'm gonna actually go on the defensive side here. Okay, high net worth individual to have great credit profile. So they basically talked about in the earnings call that their people or the consumers that they are signing up are high net worth individuals, and they actually mentioned that, and which was a very, I would say, if anybody comes and talks about SoFi and compare it with anybody else, like Robinhood, some people were comparing it with other fintech, I think this is their biggest differentiator. Now I know every bank will come out and say they have the best consumers because they only go to the best of the best. But when a company comes out and gives you a salary range, and this is what, the next thing I want to read over here. Okay, so let's continue reading this here. High income, and they need the product and services that we have developed, and most of the big banks have walkways in that provides free of products. Okay, this is again Bloomberg messing up here, but this is what I want to bring your attention to. What I would say is this, just echoing what Anthony said, our demographic and credit profile of our member base is extremely strong, and we see that playing into our result. The weighted average income of our student loan borrowers is 170,000, okay, and an average FICO score of 775. This, in my opinion, right here, these 2 points are the key point that SoFi will be able to navigate the challenges that they're going to face in the coming months. And we are going to face some challenges in the coming months. We are seeing it. We are seeing the side of it in Europe already. and it's going to come to US, it's going to trickle down to US. Okay. Now let's continue. The average income of a personal loan borrower is 160,000 with an average median score of 746. Then our overall credit profile and risk metrics are trending really well, both on a year-over-year and sequential basis in terms of 90-day delinquencies, and our P&L 90-day delinquencies are at 14 basis points. This was higher in the previous earnings, and this has come down, which is a great sign for... Did I just lose the recording? No. Okay. Which is a great sign for SoFi. So this was very bullish, and that's why I marked it in this red over here. This was a very bullish statement for them to come out and give these kind of numbers, and especially this kind of delinquency rate, which was very exciting. Okay, now let's move on. So Analyst says, thank you, super helpful. And they talk about, we are getting some questions today, post that on the EBITDA for the second half. I mean, we have done the work. We know it has to do with the longer duration and deposits, and maybe you can clear skin quickly before bridge for investors like us to sort of kind of give the idea of that where we are in the first quarter and second quarter, that 40 million-ish ramp in the second half that we hope for. Okay, so then SoFi management came. First, the bank is going to start contributing much more meaningfully in the back half of this year. Okay, so we know that they just turned into a commercial bank, and it's going to take some time for them to go and start contributing towards it. What we're really proud to say is that all new applications for our lending products are going to a bank as of a few weeks ago. So going to a bank as of a few weeks ago, I'm sorry, I pressed the wrong button. Okay, so what it means is that basically they are saying that all the new loan application, and we know that they had an uptick in loans, are now going to be done through SoFi Bank, which means, and I'm pretty sure you already know this, more money in their pocket. That means they are going to make more money from those loans than they were making before, which is again a bullish sign for a company. Okay, despite growth is going extremely well, and as a result, we are going to start benefiting from a lower cost capital, again, because they are a bank, they don't have to borrow money from outside, and we are going to start seeing the benefit play out of being able to hold for longer period of time as a scale in back half of the year. And then the second thing, the second bucket is related to in some of our higher margin businesses, especially our personal loan businesses and home loan. So being a bank absolutely has a benefit, and they just started a few weeks ago. As they say, being a bank means deposits coming into as a bank. So I think we are going to see this scale massively in the Q2 and Q3, when bank will be doing more and more deposits and will be basically making more and more money internally because they don't have to go out and borrow. I'm going to continue here for the next, because we are getting to the interesting part. Okay. So it says right here, this is John, congratulations on the good number. So my first question is, I know it's very early, but maybe we can give us, or you can give us some perspective on the early progress within the bank. And this is what Anthony Noto is saying. Currently, we are offering 1.2 to 5% on checking if you do direct deposit with us, and you get a host of other benefit as a member, and other benefits in that account be changing. With these, we do free roundups, we have overdraft protection, you get a free certified financial planner, our relationship, in addition to all the other breaks, you get another loan, etc. We have seen tremendous uptake of that product since we launched it. I will say energy, my prepared remarks, I don't know what it means, but basically they are saying that being a bank will have more benefits than just offering a better quality loan or better interest rate loan to the members. I think the benefit are going to trickle down to each and every part of SoFi's cross-selling business. And SoFi is very aggressive in cross-selling to the members, and that's why in my previous video that I said that when they say that they have a member growth of 500,000, it's actually a little more than that, because people are using more than one product. And this is very clear from this that they are going to continue ramping up that process and basically bringing in people, more and more people into the banking business. Okay, now I'm going to go over to some of the questions which were more interesting about the moratorium, the student loan, which we know is a big part for SoFi. And I was happy to see that this earning, they know that SoFi or student loan moratorium is not going to end this year, and they are chalking it off, and yet gave us a bullish earnings or bullish revenue outlook. Okay. So this is the analyst. If you just think about the moratorium versus the floating idea of perhaps even 10,000 off the lending, how does that impact the business versus the moratorium? And I really do appreciate the early remarks on the high end and high income, but assume those folks maybe took out larger loan on average than just. The average loan person is within student. They are, so any color you can provide on how that might affect our business. Okay, how are you thinking about the dynamic between the moratorium of 10,000 per person, that for forgiveness? Okay, so it says, prior to the pandemic or student loan, refinancing business had an average loan size of about 70,000. This is their average loan size, okay? So the average loan that was being refinanced with was 70,000, and we are doing over 2 billion of quarterly. Where when people thought that more, and in January we saw a big surge in late November and December, so that 70,000 demographic Chris mentioned, people should understand any 130 refinance with us would not be eligible for forgiveness because they now have private loan. So once the person refinance their loan with SoFi, that doesn't fall into the student loan anymore because that becomes a private loan. So they will not be eligible for forgiveness until it's the original student loan that was taken out. And a lot of people did refinance as per SoFi. The federal student loan forgiveness 10,000 for everybody, but for those that weren't economically below a certain income class, to 50,000 for everybody with the President Biden campaign. So we have heard that before, right? I mean, the President Biden has said that, okay, there will be a $10,000 forgiveness below a certain income level. And there's a lot of debate about economic level. I have heard anywhere from everything from 75,000 to 125,000. Now, if you look at SoFi, well, they have about, I would say, a lot of people about their medium average income is 175,000. So they will easily, most of the members will easily have to pay back their loans because they won't qualify for the $10,000 forgiveness because of the income level of 125. Of course, there will be few, but this is an important point to note. So our guidance, and this is where it gets really exciting. So our guidance that Chris mentioned at 1.50 billion or to 1.51 billion in 2022 is an assumption that the student loan business does not recover. So just imagine that once this is all said and done, what kind of revenue SoFi will be generating in the coming years. And that's why I said even in my previous video that 2023-2024 will be the year for SoFi where they're going to really ramp up their revenue and also their EBITDA. So this is very exciting to see and very reassuring to see what SoFi management team is basically telling us here. Okay, now I want to talk about this particular, and I'm going to come on the camera for this one. This analyst, I mean, I'm not too sure what exactly is going on because when I was listening, and I was listening to the live call, this person, as soon as he asked the question, few minutes before, I got an alert on Bloomberg that Bank of America, Mihir Bhatia, he has downgraded or SoFi to basically the level from, I think, 10 to 7. So without even getting on a call, an analyst can come out and change the price level because they don't even know exactly, see, most of the analysts, they usually come out a day after or 2 days after to revise their price target because they want to soak all of it in. What was said in the earnings call, what was given in the earnings report. But when an analyst, without even listening to the earnings call, it wasn't finished. I have the timestamp. I was like, I was listening on the earnings call and all of a sudden I see this flash. He didn't even ask this question yet. He was not even on. And I was like, wait a minute. The earnings call is not even done and he has already given his price target of $7. So that shows that how, I shouldn't say shallow thinking, but that shows that how these analysts, they don't really look at what is being said and what is being told. They just look at some numbers and they're like, that's it. This is a $7 worth of stock from $10 or whatever his original or previous price target was. And I am actually going to do a video after this one and I'm going to show you the comparison between before price target and after price target. And you will see what I'm talking about. But this was interesting to see that, okay, let's read the question. So one next question comes from Mihir Bhatia from Bank of America. Thank you for taking my question. Maybe just to start, can you talk about your macro expectation for the rest of the year? Macro expectation for the rest of a year is a very broad question, right? It's not very targeted on, say, student loan. It's not very targeted on that, tell us about when do you think you will be profitable. No, he's talking about the macro expectation for the rest of the year. In my opinion, if I'm an analyst, okay, let's talk about it. So if I'm an analyst and if I am basically assessing a company, or if I am analyzing a company, wouldn't I want to know all the details about the company, right? The macroeconomic factor, the microeconomic factor, what are they doing with the loan business? Let's talk about SoFi, right? If I'm an analyst analyzing SoFi, my question would be that how are you planning to navigate your challenges in the coming downturn or the global growth as it slows down? The housing market is going to slow down. What about your home loans? Okay, what about the student loan moratorium? What about, there are so many questions an analyst need to know when they are analyzing any company. Doesn't matter what the company is. But when an analyst like this guy over here, when an analyst like Mir Bhatia, he comes and he asks a broader question, but right before the broader question, he releases the price target, what do you make out of it? Because I literally felt, I was like, I cannot believe that somebody would come out with a price target and still be on the call and have a question ready. So just think about it. I mean, it doesn't make sense. Okay, then look at the answer. Absolutely. Though in terms of the overall macro expectation, we are assuming that the rates will continue to increase, what we fade into our for guidance. So SoFi is already considering what the rate is going to be, is that we would have 7 additional rate hikes between now and end of year. So they are looking at all these macroeconomic factors, all these other global factors, because I was just reading a report that says that we have lost $11 trillion since the downturn, worse than 2008. So, you know, like we are in a very, very weird market situation. And the more and more I read about it, the more and more it shows that we are not done with it yet. And so, I mean, of course, they can plan everything. I mean, you know, okay, 7 additional hikes, but nobody knows where we are going to be in the next few quarters, in the next few years. But at least they are thinking about it. And this was a very smart answer that, okay, what do you think about macro expectation? Which was a very, very broad question. So then it says, analyst says, got it. And then anything, then the rest of it, any other kind you can provide, I don't know what the Bloomberg is trying to say here, can provide beyond just the way you're feeling for, I guess, unemployment, consumer health, those. So look at the quality of the question. It was just a question that was thrown because analyst covering SoFi has to be on the earnings call and look just. So I feel like they need to do proper digging into the company, proper digging into the stock before coming out and giving the price targets like that. That's my opinion only. Of course, I'm not an analyst. I'm just a guy on YouTube. But I feel if I was an analyst analyzing this company, I would have asked this question before giving my price target. I mean, that's what it makes sense. Okay, then it says, yeah, we are assuming that the voice environment pays so much for it today. We are not assuming a recession when you have only framework that will allow us to get in front of some type of deterioration, the economy. That's of the magnitude and would have an impact the way for loan losses. We have been doing this for years and lived through this cycle before and will be vigilant that front. But right now, there's an indicator are showing relatively strong demand and ultimately stable economic environment. So again, same thing, very broadly answered question for a very broadly asked question. If I put it, if it makes sense, actually, I don't know. But it was a very, very broad question and they answered very well in a very blanket statement. Okay, so now let's talk about this question. Okay, so it says over here, right here, good evening, Anthony and Chris, understanding the trajectory of personal loan growth here in your assumption on a really nice quarter, 25 minutes, wow. Okay, on the really nice quarter for the outline, what kind of growth maybe you are assuming in the year-over-year guidance for the rest of the year? And then just as you kind of look under the hood here, are you seeing more demand from your customers without product, or if I understood Anthony's comments correctly earlier, with product, I don't think they meant to say without, you know, apologize for the script here. Okay, so then Anthony Noto replies to this. Or it says, I'll let Chris talk about the outlook. Okay, so it says, as the rate go higher, as you go back and look at our advertising 2018 and 2019, you will see we have a use case advertising we are tossing behind home improvement. So interest rate go higher and individual look to remodel their home instead of buying new homes from that product also benefits. One of the things that we can do now is that we wouldn't do or we didn't do in 2018 and 2019 is that you can market the product or existing customers. So this is where the first point comes back, that they are now servicing each and every segment of the sector. So if a consumer is not going for the home loan with SoFi, they can go for home improvement loan with SoFi. And that's where the financial product or the sort of financial product they have available is going to come really handy, and that's where the differentiator is, where they are a one-stop shop that Anthony Noto keeps talking about. So this, I just wanted to, I just wanted to bring this question out to you. This question was not important, but his response was, look what we did. We saw the need that, okay, home loan is going to go down because of the interest rate, but people, those who wants to improve their loan, the home improvement loan is going to go up. And that's what's very exciting for SoFi, because now they can tackle or they can basically handle both requests of the consumers. So this was, of course, really bullish. Anything else that I highlight? Okay. This is what Anthony Noto's closing remark, which I want to go over one more time in case you missed it. I cannot predict the future, but I can assure you that we have the best strategy in the most diversified set of businesses that have delivered superior, consistent financial performance that generating both high growth in revenue and strong profit as measured by EBITDA. We also have significant financial resources with more than $5 billion in capital and a battle-tested team. So, my friends, this was the reason. When I attended the call, when I looked at the Q&A, this was the reason that made me make that video on reverse split. Because this call was very bullish. These statements were very bullish. Their income level of $170,000, their medium income for the loan, their credit score of 775. These are all very bullish sign that company is not crying for members. They are only going for quality people, and they are getting quality people, and yet the members are going up, which is a very strong sign for a company. So if without the student loan moratorium, if the trajectory of their revenue is 150 billion in the next, 2022, and then when the student loan comes back or whatever happens with them, and then now they're saying they just started receiving the bank or deposit into the bank. That's going to also help them generate more income and pay less interest. So I feel if those things are so positive, and if the company is in the right direction, if they know what they're talking about, if they know what they're doing, with the deposits and how they're going to attract new members and how the growth is going to be. That was my point of that. If everything is looking so strong, then why do a reverse split now? That was my only reason. I am bullish. I am long on SoFi. I have a lot of money invested in SoFi, and I continue to hold that money. I have a lot of options which are deep in red right now, but I don't care because I have shares to make up for those options. So I personally, I'm very excited about the company and SoFi, and this call that I went through with you shows that they are also very confident about SoFi, and the team is also very confident about it. And that's all the reason was that I wanted to know a little bit more about why now. That was my question. So let me know in the comments, what do you guys think about it? And what do you guys think about the earnings call? I'm sure some of you have listened to it. Some of you have seen the script. So what do you guys think about it? And in your opinion, what is the most bullish sign for SoFi in 2022, also in 2023? So let's talk about 2023, because 2022 we know is going to be a lot of pressure of all that's going on in the world. SoFi is not alone. And this is one thing that I want to share with everyone. That doesn't matter if you are a Google, doesn't matter if you are a Tesla, doesn't matter if you are Amazon, SoFi, no matter what company you are still trading in the same stock market. A good news for a company can only elevate the company for so long. The market dynamics will come in play, and investor sentiment will come in play, and will have the effect of what market is feeling. So market is right now not feeling bullish. You saw it, what happened in the market today, yesterday, I don't have to say it, what's going on in the markets. So that's why a company delivered amazing, SoFi I'm talking about, delivered amazing earnings. They had an amazing call. the analysts asked good questions and they had smart replies and good replies. So if all of this is so bullish and so good, then why are you doing reverse split now? That's the only reason why, what we want to know. So again, let me know in the comments, what are you thinking? What are your thoughts about SoFi? And also, if I missed anything in the earnings call that you saw or you thought was very bullish, would love to share with everyone. And if you like the video, then give it a like and consider subscribing to the channel. And of course, our Discord and Patreon links are mentioned in the comments below, in the description below. So make sure you take advantage of it if you want to chat with like-minded individual. And I will have more information in the coming days about 13Fs are being filed now. So we would see how many institutions have increased their position in SoFi, how many of them have decreased, and what kind of changes have taken place. I will make that video soon. Until next time, you all have a sparkling day.